All right, welcome to Talk Tickers. Today we're looking at the gas utility Spire. That's ticker SIR. Now they just dropped their latest earnings report, and honestly, the numbers are telling two totally different stories. It's a really complicated picture for investors right now. So, let's get into it.
So, here's the big question, right? On one hand, you've got a Q4 earnings miss that predictably sent the stock down. But then you listen to the conference call and management starts talking about a massive 20+% jump in earnings for next year. So what's the real story here? Is this a red flag the market's sniffing out, or is this actually a huge buying opportunity in disguise?
Okay, so to really get to the bottom of this disconnect, we've got to start with the numbers that caused all the commotion in the first place. And yeah, the headline results were, well, they were messy.
And here it is, the big contradiction that had everyone scratching their heads. So Spire reported an adjusted loss of 47 cents a share. Now, look, a loss in Q4 for a gas utility isn't a shock. That's just seasonality for you. But it missed what analysts were expecting by a penny. A penny! But then you look at the revenue line, and they absolutely crushed it. A beat of 8.5%, pulling in over $334 million. You see? An earnings miss, even a tiny one, with a huge revenue beat, that's just a classic recipe for Wall Street confusion.
And what was the market's knee-jerk reaction? Well, it was pretty clear. The stock dropped, closing down 2.4% on the day. It seems like everyone just zoomed in on that 1-cent miss and some higher-than-expected costs, and they pretty much ignored that massive revenue beat.
But this is where the whole story really starts to get interesting. Because as soon as the earnings call started, you could tell management had a plan. They didn't waste a single second. They immediately started shifting the conversation away from all the noise of this one kind of weak quarter. Their eyes were set firmly on the future.
Yeah, the CEO, Scott Doyle, he came out swinging. He basically set the tone right away by saying, "We made significant progress towards setting Spire up for long-term success." And that tells you everything, doesn't it? This call was not about making excuses for a tiny miss. Nope, this was all about getting investors to look up from the weeds and focus on a much, much bigger story.
And boom, here's exactly why they wanted to change the subject. Just forget about that quarterly noise for a second. Look at this. For the full year 2025, earnings were already up a really solid 7.5%. But that's not even the main event. The real story is the guidance. For fiscal 26, they are calling for $5.35 per share at the midpoint. You guys, that is a 20% jump, a massive leap. And they didn't stop there. They're even pointing to another increase in 27. This isn't just regular old growth. This is what you call a major inflection point.
And you know how you can tell they're serious? They're putting their money where their mouth is. The board just signed off on a 5.1% dividend hike. This makes it the 23rd year in a row that they've raised the dividend. I mean, think about it. Is that what a management team does when they're worried about a little quarterly miss? No way. That's a huge vote of confidence in their own plan.
So you're probably asking, okay, a 20% jump is great, but where's it all coming from? Well, it's all being fueled by some really big strategic moves they're making behind the scenes.
It really all kicks off with this massive number, an $11.2 billion capital plan over the next 10 years. But what's really crucial here is where that money is going. 70% of it, a huge chunk, is going straight into core safety and reliability upgrades. So you can see this isn't some risky moonshot. This is them doubling down on the most predictable, most regulated part of their business.
And hey, if you're kind of new to investing in utilities, there's one term you absolutely have to know: rate base. All that spending, that big CapEx plan we just talked about, it directly grows their rate base. Think of it like this. In the world of regulated utilities, your rate base is basically the asset value that the government allows you to earn a profit on. So the bigger your rate base, the bigger your potential earnings. It's that simple. And that right there is the engine that's going to drive all this growth.
And it's not just about spending money they already have. They're also making some smart trades. On the inside, they're buying Piedmont's Tennessee gas assets from Duke, which, you guessed it, expands that super predictable regulated rate base. And on the outside, they're thinking about selling off their gas storage business, which can be a lot more volatile. The takeaway here is crystal clear. They're going all in on the stable, regulated side of the house. That's their playbook.
All right, let's bring it all home. You've got the messy quarter over here and this really compelling growth story over there. So how do you weigh these things? How should an investor even think about this? Well, let's put it all together and give you our official take from Talk Tickers.
Okay, let's break down the bull versus bear debate. The bull case is pretty simple, right? You've got that massive 20+% earnings jump coming in 26, a solid long-term growth plan, a smart acquisition, and of course that dividend they just keep on hiking. The bear case, on the other hand, points to those cost pressures we saw this quarter, which are real. They're also spending so much money that their free cash flow is negative for now. And of course, there's always the risk that these big plans don't get executed perfectly or that regulators don't play ball.
So, after weighing all of that, our rating here at Talk Tickers for Spire is outperform.
And here's why. We think that 2.4% stock drop was a classic case of the market not seeing the forest for the trees. Everybody got hung up on the short-term, seasonal noise of one quarter and totally missed the massive pivot that's happening. Management did a great job of shifting the focus to where it belongs, on a powerful, long-term growth plan that is all about expanding that reliable, regulated business. That's the real story.
So that's our take on Spire's latest quarter. Of course, always remember to do your own homework. This is not financial advice.